up, guys? Welcome back. We are there. We have made it. We are at the last budget in the master budget scenario. Look at all this. All right, so we are at the budgeted balance sheet. So it's the final product of the financial budgets. It is going to list all anticipated asset, liability, and equity balances for the period. Okay, so that's a little fast fact about our budgeted balance sheet. We'll go into it in a little more detail here. Budgeted balance sheet. So it's just like a traditional balance sheet. It's going to follow the traditional format as well. So traditional balance sheet only with estimated figures instead of actual figures. Because we remember in Accounting 1A, financial accounting has a historical perspective, so it's always looking back at actual figures, whereas a budgeted balance sheet is looking forward to future amounts, and these are what is anticipated or estimated for the period. We said it's also the final product of the financial budgets, and let's go ahead and look at that format that we're going to have. Company name, balance sheet, and it's a point in time as we remember. So let's say it was for the quarter, so it would be March 31st, and we'll say 2020. Even though I know it's in the past now. It's not in the future anymore. I know. All right, and then we're going to have our assets coming first, of course. Think of some of your common assets that you would see: cash, AR, inventory, your PP&E. So let's pick one. Let's assume they have machinery, less accumulated depreciation on the machinery, of course. And if we had maybe any land, and that would be total assets. And if it was a classified balance sheet, we would separate this based on the category, right? Current, long-term, etc. But we're just keeping it simple for now. Liabilities and stockholders' equity. We remember that. So under liabilities, you have your accounts payable. If we had any maybe short-term loans, although I'm not classifying it, so we'll just say loans. That gives you total liabilities. And then we go on to stockholders' equity. Stockholders' equity we know is made up of common stock and retained earnings. There, isn't that beautiful? It brings back all those memories from Accounting 1A. Total equity, and then total liabilities and equity, and it should of course equal our total assets from up here. And I know we're already familiar with how to do a balance sheet because you've done them in 1A, but just to kind of circle back to see how this plays into the budget that we've gone through. So the cash figure that would go here, that's going to come from, you're going to pull that from the cash budget. The AR is going to come from your cash collections schedule that we prepared. Remember that? We basically said, for instance, this one, we're still missing 25%, right? We've collected 40, 35, we're missing the third month of 25%. That would be AR. Here we'd be missing 60%, right? So your accounts receivable would be your remaining account balances that have not yet been collected. All right, inventory, that's going to come from our purchases or production budget, depending on if we're a merchandiser or manufacturer. Our machinery, that's going to come from that capital assets budget. Your accumulated depreciation, it's going to come from a couple places. Any prior year balance plus, remember we had depreciation on our selling and administrative budget, so plus S&A or MO budget, depending on if that machinery is being used for period purposes or for product purposes. Land, also capital assets. Okay, so it's just kind of showing you where all this data would pull from. It's going to pull from prior schedules, prior budgets. Liabilities, AP, that's your cash payments schedule. Basically anything that we still owe, right? So here we still owe 30% of the March amount. So that would be AP. Loans, if it was a loan related to our capital assets, for instance, that would come from your capital assets budget. Okay. Common stock, this is usually prior year, retained earnings prior year plus our estimated net income minus estimated dividends. Because we remember how to calculate retained earnings, right? It's your beginning balance, which would be from prior year, plus what we think our net income is going to be, which would come from your budgeted income statement, minus your estimated dividends. We saw dividends on the cash budget. So this is that end product, and everything on here is going to pull from one of your prior budgets. For now, I'm just going to have you know the facts about the balance sheet, right? That the budgeted balance sheet is with estimated figures only, and it's the final product of the financial budgets. It shows estimated assets, liabilities, and equity, but it's unlikely that I'll have you prepare one on a quiz or an exam, okay? Just know some facts that could be tested like in the multiple choice. All right, and we are done with budgets. I don't know if you guys are as happy as I am. Those budgets went on forever, and all these videos took up my whole spring break, so I am glad we're done with the budgets. All right, bye.